How's everybody doing? Today, I have a brand new Bank It or Tank It video. I have 3 stocks that we're going to add to our watch list today. 3 highly watched stocks, so there'll be ones that you want to take a look at today. But look, Federal Reserve was all over the news yesterday, moving the market, so that's where we're going to start today as we dive in to my latest Bank It or Tank It video. Look, before we get going though, like, subscribe, leave me comments with stocks below. Let me know what stocks you want me to feature. And up here in the corner, we're going to have a link to get 2 free reports in this volatile market. One shows you how to get the report for 10 stocks that are going to zero. And then I'm not a complete bear. I know it's volatile out there, but there's also going to be stocks that are taking off. So I have another report that goes with it. 10 stocks going to the moon for one low price. Comes with a full year of my research service flash alerts, which builds on what we talk about here in my Bank It or Tank It videos. And you'll learn more about that as today goes along. So let's dive in. All right, look, the Fed blew things up yesterday. Jerome Powell, in basically the press release, tweaked the wording a little bit, came off a little dovish. Market started to rally. It was up 1%. Everybody was loving the news. Then 30 minutes later, Jerome Powell comes out, gives his testimony, gets to take some questions, and that's when things fall apart. The market rolls over, and all hell's breaking loose. So we're going to take a look at the charts today. We're going to start with the S&P 500, so that way we can really dig into what happened with the market yesterday and how things were moving. Because look, the Fed is dictating the moves in the market right now. This is the S&P 500. We're going back to April of last year, 2021, just showing you the downtrend that stocks have been sitting in 2022. So by now, we're almost used to the volatility. I mean, every day it happens. Yesterday felt pretty brutal to see the market sell off. And I'm saying yesterday, I'm recording this overnight, so I already saw the moves that took place after the Federal Reserve announcement, and they're right here on this chart. We have the big down bar on the candlestick for the S&P 500. I just drew in this highlighter green here color to keep an eye on to the downside. If this can stick and hold and we get a bounce off of this, a little bit of a relief rally, because at the end of the day, there was some dovish comments from Jerome Powell. I mean, he said that right now, no reason to look for a pause or a pivot, and he definitely stayed hawkish on his book. But what's going to happen over the next few days, over the next few weeks, Federal Reserve members are going to have more press opportunities across the board just to talk about what they're seeing in the market. We're going to see more economic data coming out. That's always going to be factoring in here to a potential Fed pivot, maybe in December, maybe helps spark a center rally. But right now, I mean, I've been talking about it. I wanted to start with this today because I've been talking about how, this is going to probably be the last bear market rally before things just fall apart and the bottom falls out on this and we roll over significantly down, because we get kind of caught up on the fact that maybe we're near bottom, maybe we're near capitulation in the stocks. It's just not the case. We are not there. We are in the whole cycle of bear markets as far as they go. We are just in the fear stage. We haven't hit panic, and we have definitely not hit capitulation. That's coming, and that's when you just get this dump that goes from this area where it seems like it's holding up, seems like, I mean, honestly, right now, if things would have went well for the Fed from that meeting, and if we'd have rallied for another couple days into next week, you would have had people calling market bottom, saying the bottom was in, saying that this was the bottom. Instead, markets pulled back just 1%. Nothing you see on this chart, nothing compared to what we've been seeing here over the last 12 months. It's just a typical day pretty much. But now people are saying, oh, we're going to go much lower, much lower, much lower. That's sort of just 180 by people. Is what keeps this market volatile, and that's it's what's making it a trader's market right now. I know day traders are loving it. You're in and out, on these big swings. I like to be a little bit more of just a weekly trader. I like to hold for a couple of weeks my trades, just time some of these trends. I mean, you can see that we had this little basing here took about a month, and then we started to move higher, but this didn't last too long. It's just a couple weeks. I expected that to continue. That's why I have this little trend line that I'm going to be watching closely for the S&P 500. If it can hold, if we can bounce off of that, we know this market. We can shoot up 1-2% on pretty much no news. So there's no reason to panic. If you're long right now, we're going to keep this level as a line in the sand. I mean, overall, I'm bearish. I'm one of the biggest bears out there. I have the free report, which you can get below, talking about my bear market guide to thrive in this inflationary environment. And basically, I'm calling for the market to go much, much lower And frankly, the Fed hasn't even started to fulfill my checklist that I have for them. They're nowhere close to signaling a market bottom is in. They are still increasing interest rates pretty aggressively. So that's your sign to stay bearish overall, but play these swings. So right now the trend was to the upside. That's what we are looking at. But here shortly, especially if it breaks below this, I'm in position for more weakness to the downside. Ironically enough, so this was November 2nd. This is the Federal Reserve meeting. The last meeting was September 20th. So 21st was the Wednesday. So this is where we are sitting almost identical it was essentially identical at the close before the Fed meeting, and almost an identical candle coming out of the Fed meeting. We had a little bit of a wick up top, which I hope you can see that, to where it just shows that the price opened here at the top of the candle, eventually moved higher to this little wick that you see up top, but then fell all the way down and closed at the lows of the day. So when we look at where we were yesterday, on November 2nd, we opened here. Eventually it moved higher. That was on the Fed announcement. We stayed lower up until then. Fed announcement got a quick pop, and then things pushed lower from there, and we closed at the lows of the day again. We can see what happened last time. We rolled over from there, went on to fall down to an ultimate low, 35.13 or so. Down here on the chart, pretty sharp drop for the S&P 500. Definitely almost feeling like you were in free for all there, especially with the big 180 there on that Thursday, from being opening so high up and then reversing to the downside. But look, that actually marked the ultimate low in the market, and then we climbed out of that. That was the market rally that we've been in so far. So where next? Well, with the Fed, they're still adamantly on hiking interest rates, so that's how we're going to play it. We expect more volatility, but as the language comes out from other people talking about a Fed pivot, a Fed pause, that's the rally that we were trying to play, and that's the rally that I still think has potential to play out, because Jerome Powell, after he gets home, he's going to see the market took his comments a little dovish, or a little hawkish, a little bearish. The market started to sell off. Maybe they couch it a little bit here through some press releases, through just some other things that are going to be coming out, whether it's from investment banks and that sort of thing. Just building things back up a little bit to try to build on this rally. So that's something that we can keep an eye on here in the very short term. Again, though, if it breaks below that, I am expecting it to test new lows in the coming weeks. So that's how I'm playing, more than likely playing both sides here because of the volatility. It can swing either way at this point. We're just waiting on these key levels to break, these key things to bend, and that's part of my whole bank entertainment analysis. We follow these stocks based on key levels, based on key trends, and when they break, that's either time to get in or time to get out and preserve capital and so on. So that's what we are keeping an eye on here on my side of things. Bottom line, you don't have to panic right now if you're still long. We can still be in a bear market rally, in this key level right here that we're drawing on a short-term trend line on the chart could still hold up. Something to watch closely here as we close out the week to see if we can hang on to this. Now let's dive into our three stocks that I wanted to cover today. First up, Apple, tech giant, very massive company, but it has not gone through the same type of drawdowns that we have seen from other tech stocks. I mean, we look at the pullback here from the highs to even the lows, it's just 30%. I mean, when you look at Meta, and even Google's down, I think 30 or 40%. Meta was down 75%. So massive drops from these FANG type stocks, including Netflix, and Apple's holding up. So is this going to hold up for long or not? I mean, right now it's kind of in no man's land. We see it go through the relative rotation graph, candlestick colors here as a red, which was lagging. Then it moved up into blue, which was improving. So this is what you would expect to see. Next would be leading, but we are starting to get some chop here. You would like it to go into leading and continue to head higher before it weakens, which would be back into this orange color, and then lagging the market, which is red again. So that's the cycle of the stocks that, based on the relative rotation graph that I like to follow, that you can expect things to trend. And we see it right here where it went from lagging to improving. That was a nice swing for the stock. Now we want to see how the leading quadrant, it can continue to push it higher here. And I have it in this very wide wedge pattern. But these are the key levels that I wanted to keep an eye on, because when one of these break, that's when you can really see this thing take off. Now, I'm bearish on the overall market. I'm bearish on the majority of stocks that I'm going to take a look at. But for Apple, I don't like fighting the trend. I mean, it's in a wedge pattern now, but it's been moving higher on the chart. It's just look at it from left to right. This is from the 2020 pandemic, but if we zoom out, you still see that it was moving massively higher. Now it's in this definitely a bear market, definitely pulling back. But if it can continue to hold these lows, continue to make higher lows, and create this wedge pattern. The breakouts, any man's bet. It could go either way. So I'm not playing the breakout right now. I'm not betting on which way it's going to go. Instead, I'm going to follow my key levels with the red resistance, green support, and whenever it breaks below or above that, that's when we'll jump in and we'll take actions based on my flash alerts. So that's how my flash alert system works. We're going to lay out stocks like this. We have dozens already. We're going to continue to add every single week. And when key levels get broken, then I email you a flash alert letting you know how to trade it, what it means, basically what it says about the stock. And then you can take what you want from that. You can either buy more stock, sell more stock, trade options, however you want to do it. I usually recommend options just because that needs more guidance than trading stocks. But, once you get a call option signal, then you can just buy the stocks or however you want to play it. But it just gives you the information for, again, one low price. You can click up here and check it out. One low price, 2 free reports right now that'll help you get through this volatile bear market. So be sure to check that out if you're interested. So Apple today on my Bankrupt list, again, because it's trending higher left to right, we're going to leave it on a Bankrupt list, see how this thing breaks out. But just because it's on my Bankrupt list, that means that on stocks that are on my Bankrupt list, I may look to play these swings to the upside. But by no means does it mean that as soon as it falls below this, I'm not turning 100% bearish on it. So that's what I'm keeping an eye on. If it falls below this key support down here, then we're going to turn bearish, add it to our Bankrupt list, and trade it as needed from there. Now another stock, Boeing. This is in the aerospace and defense sector. This is a sector that came up for my other service, Bankrupt Elite, where they're in a seasonal strong period right now. We got in on this. This was a nice move higher for our stock, for our ETF. In the short term, yesterday, November 2nd, the dip pulled things back a bit, so we're going to reevaluate how we go about that today and take a look at those stocks. But Boeing falls into that category. We're seeing it move higher here. You can see it's making the rotation beautifully based on the RRG, going from red, which was lagging, blue improving, green leading, moving higher the whole time. Now we're approaching another resistance level. So this is a longer term red resistance level, and we have a green support across the bottom here. So instead of trying to chase it right here and thinking that this is the breakout, the stock's going to continue to run higher, showing some strength in the overall weak market. You can see it was up nicely on the second there on Wednesday. So that was great to see. But we're not going to chase it. We're going to wait for it to break out on one of these key levels. I had line alerts in my system here, and I'll get notified as soon as one of these trends break. Then I'll send you the flash alert basically, and then you can take action right away on however you want to trade this. So Boeing for today, it's in this wedge pattern, but kind of like Apple, we look back here to 2020, and it was trending to the upside. Boeing's definitely more to the downside, a little sideways, so we're going to have it on our Bankrupt list for today. Again, I'm bearish on the aerospace and defense sector in the short term, but we're going to have it as a Bankrupt stock as long as it stays below this red resistance level on the chart. That'll be something to keep an eye on. Now, our last stock for today, Uber Technologies, the car service company that you can just pick up a ride in on your mobile phone. Awesome technologies, great stuff, but the company's still struggling to make money. It was up on earnings. This was just Tuesday this week, pulled back a little bit with the market. Now it's kind of setting up to where it could potentially close this gap and get back down to $27 a share or less and test this green support. So pretty bearish on the stock, pretty bearish on a lot of things, like I said, in the market right now. We'll have this one on our Bankrupt list, but I'm not trying to go bearish just yet. I want to see it break below this key support line. Then I would turn bearish, take action. Even if you're long the stock, you can hold it here because there's still the potential that we get back above this red resistance, that we can even climb up here and test it. There's always potential for upside in the market. So, that's why we use these key levels to help us navigate all the volatility that's going on. So right now, falls below this, then we'll take action. I'll send you a flash alert if you're signed up for my flash alert service. So don't forget, check that out. There'll be more information below. That's all for my video today. Pretty short. Just wanted to highlight some things on the Fed. That's the big news right now. But at least the Fed's going quiet for about a month. For the most part, we don't get another meeting out of them until December. So we can ignore the Fed for a little bit. Let's watch the price action in these stocks, in the market, and take trades accordingly. So that's all for today. Until next time, I'm Chad Shoup. Let's get it.